Hello, welcome to the November edition of TAXtalk. My name's Anita Monteith, and with me today I have Sue Moore.
Hello.
And Frank Haskew.
Hello.
Sue looks after our private client committee and Frank is head of our tax faculty. Now, we're going to be talking about the budget today, aren't we?
Yes.
Which is 48 hours ago, and it feels like it's a very, very long time ago already.
A lifetime.
Now, Frank, it's quite some time since we had a budget at this time of year. The cycle has changed, has
Yes,
it
well,
not?
of course, that was announced last year, and this is the first budget. We're now going to have it in November, so that's going to be how it proceeds from here on. So we're now going to have a process whereby we have a finance bill published, and that's going to be on Friday next. So we've got a week before that comes out, and judging from the amount of material, I suspect it's going to be a blockbuster again. And the idea is that the finance bill will be passed through Parliament before the start of the next tax year. So that's the sort of new thing. So everything will be on the books before the start of the tax year. So taxpayers will have certainty before the start of the tax year as to what the rates and allowances and the rules will be. That's the theory.
Of course, that's the theory, but it also means we're going to have some consultations, doesn't it, which are going to be launched shortly, possibly the week after the finance bill, so do you think?
Yes, they've put varying dates for the consultations. There was one actually came out on budget day, which I'll mention later. But some of them, the dates for the publication was in 2018, so they will be stringing them out a little bit, which from our point of view is helpful because we give responses, and too many all at once means that our resources are spread a little thinly.
Yes, I'm a bit worried about the ones that are going to be running through to the end of January, where we may need help from some of our smaller practitioners.
Yes,
But
yes.
I think there's going to be quite a few on Friday as well coming out, aren't there? So we're going to have a busy Christmas, I think.
Okay, so all leave is cancelled. Thank you, Frank. It's a nice way of telling. That's great.
You can have them with your turkey.
Well, let's get into some of the detail. I should just mention that we have all been working very hard in the last 48 hours to produce our usual summary. There's a comprehensive summary of all the things that were announced on budget day, along with the papers that came with them. Jane Moore has just about signed off on the final copy, I think.
I've got a final draft here, I think.
Okay.
So subject to any final amendments.
And people will expect to see that published on the ICAEW.com website early this afternoon, and it will be emailed round in the usual way. So you can expect that shortly. So on with the detail. Sue, nice gentle one to start with, the marriage allowance, the transferable allowance.
Yes, the marriage allowance means that with a married couple where they're both basic rate taxpayers or one's a non-taxpayer, you can transfer up to 10% of the personal allowance to the spouse. It's not been a very well taken up relief. HMRC reckons there's about 4 million couples eligible for it, and only about 2 million have taken it up. But one of the anomalies with it when it came in is that if you hadn't made a claim for the relief before your spouse died, then you couldn't do a claim. It had to be done whilst the spouse was alive, and they're getting rid of that anomaly, and so you will be able to claim even after your spouse has died, and you'll be able to backdate a claim for the usual 4 years. So it's just getting rid of an anomaly that was a bit of a nonsense.
I mean, it's not worth an enormous amount of cash, but
no, well, it's 10% of the personal allowance, and the sort of people that it applies to aren't going to be the people that have advisors. And generally they're not going to be engaged with the tax system at all, because everything that they get is going to be PAYE and are already taxed, so they're not going to be engaged at all, which I suspect is why the take-up is so low. And HMRC needs to get the message out there, be a bit more proactive about it.
Well, we can do what we can to help there.
Yes.
Moving on though, one of perhaps your own successes is with the landlord changes.
Yes, it comes as a great surprise to some people that landlords can't claim the 45 pence a mile for travel to their rental properties. and HMRC do webinars frequently on property tax, and it's to help people. And after each time they've run this, where they explain that landlords can't claim the 45 pence a mile, I get at least 2 emails saying, "What do you mean you can't claim 45 pence a mile?"
I hadn't realised that. Yeah.
And I've been talking to HMRC about it, saying, well, this is a nonsense, because it's just a shortcut method, and it's been proved that it approximates to your actual costs, the 45 pence.
Well, it's a standard rate we use
For everything,
absolutely,
everything, yeah.
absolutely, and it's most landlords will probably claim for about 30 miles a year to go and visit their properties, you know, so it's not a huge amount of money. I run my own practice, and my landlords do the 45 pence a mile, and we work on the basis that if HMRC wanted to inquire into the 30 miles at 45 pence a mile, we could find sufficient invoices and have sufficient records of the mileage to support what was put in. Anyway, as from April 2017, you can now claim the 45 pence.
So it does
a
have
mile.
retroactive effect, so it's good.
In that sense, yes. I mean, it's we've not reported the profits yet, have we, from April 17? So yes, it is.
It's a choice.
It is a choice. Some landlords may have claimed capital allowances and done things, and there'll be some transitional arrangements for those that have. If you look at the impact on the finances for the government, it quite rightly says no effect.
But he who giveth also possibly takes away. Would you like to comment on a rent-a-room relief and the proposals there?
Well, rent-a-room, it's 7,500 a year is the most you can claim if you rent it out.
It's quite generous, isn't it?
It is, yes. It went up from 4,250 just over a year ago. And what the Chancellor said was that it's to be looked at. There's going to be a consultation so that it can be made to target longer term sort of lettings, which is what they're aiming at. But to me that's an anomaly, because the rent-a-room actually says that it applies to bed and breakfasts and guest houses. So if their intention was for it to be for longer term lets, then why did they include the guest houses and bed and breakfast in the first
Policy
place?
confusion, perhaps.
Absolutely. But anyway, they're going to have a consultation on it, and we'll see what comes out of it.
I just think we need clarity really about what it is designed to achieve, and that way, because most of the people who claim this, I feel, won't have an agent, and so will be doing it for themselves.
Yes.
And we just need to make it simple. My worry is that if we end up with day counting, as we do for furnished holiday lettings, that the
Yes, I
administrative
think that would be a nightmare, because as you say, you know, one of the things about rent-a-room relief is it's simple. It's nice and simple, and
That's what we like.
absolutely, yes. And we haven't got much of it in the tax system.
No, we don't. We don't have a lot of simplicity. But you also encountered another issue, unrelated, but this week, student loans. You were, I remember talking about.
Yes.
Share it with everybody.
Well, it's within in the budget that HMRC are going to have to share information more regularly with the student loan company, because it's been in the press a lot that students are overpaying their loans, and this is because the student loan is collected monthly, generally via the PAYE system, but HMRC don't pay it over until about the September after the end of the tax year. And so students who have got close towards the end of their loan can end up overpaying. They could have overpaid for last tax year and they're still paying right up until this information is shared. And so they're going to do something about that. Now, what I'd also like them to do, if they're going to share the information more regularly, I looked at my son's student loan account and I was horrified to see that the interest is charged monthly on the balance outstanding at the beginning of the year, despite the fact that he's paying off a bit every month. They used to do mortgages like that a long time ago, and when the public realised, there was an outcry and the banks and building societies had to change. I think it was building societies were doing it like that, and it was when the banks came into the market for mortgages that banks did it on a real-time basis. And student loans need to be done on a real-time basis as well.
So we've got a consultate or a representation we can make.
I can feel a representation coming on. Yeah,
I've
because I
sensed
hadn't
that.
realised that, and it just doesn't seem fair.
No.
On the first point, of course, that you made, many people will never get to the end of their student loans anymore. So,
Well, no. Fortunately, my son, he was. His loan was in the slightly lower end. It was when the fees were only 3,000 as opposed to 9,000.
Let's move on.
having a younger child,
to say,
yes, a student.
it's a painful experience.
It is. Well,
isn't
now
it?
another painful experience then for you, Frank, VAT.
Well,
The
actually,
OTS. Do you don't want to talk about VAT?
Well, I was going to say, should we talk about the rates and personal allowances? Because I realised we're going to just mention that.
Okay, well, we can talk about VAT rates, but let's do personal allowance rates then.
So
first.
I was going to say that just in terms of the personal allowance rates, the personal allowance is going up to 11,850 from 11,500, which will be a step towards the goal of
That's
12,000.
£75 better off as a basic rate taxpayer?
I haven't done the calculation.
I think so. Yeah.
So
That's
the
quite.
aim
I
is-
mean, that's significant.
No, it's
Yeah,
significant.
yes,
And the basic rate band is going up by 1,000 as well. Of course, virtually all the other ones are remaining the same. So the additional rate threshold, 150,000, and the 100,000 where the personal allowance starts getting withdrawn, that's all staying the same.
Yes.
So more and more people are going to be drawn into paying those. The CGT annual exemption is rising by RPI as well. But after his trouble with NICs in the March budget, he's basically left NICs alone.
Yes, once bitten, twice shy. But we're going to have a consultation though, aren't we? On
Yes,
that. We've
yes.
also got the Matthew Taylor one.
We've got the Matthew Taylor, yeah.
So
Lots coming up.
yeah, I think Bayes have just also published some draft legislation that they want to look at on worker status. So on all
There
of
is a
that national
mention of that,
insurance,
yeah.
and there's going to be a lot going on.
It looks like they're still
the
going
next.
to be different, I think, worker rights versus tax.
Yes,
They're gonna
have they gone into the dependent contractor
Oh,
status? I think they've attempted to define it.
Oh, right.
So that's going to be interesting.
Get back to our desk and have a look.
But on national insurance, of course, we were talking about rates and limits. The starting point of national insurance is still way off the starting rate for income tax.
Yeah, so they've
isn't
still
it?
got that difference. No, so
Yeah.
there's still plenty of anomalies there. So VAT, should we?
Oh yes, please.
Yes.
I'm waiting to get to VAT.
I know you love VAT, Anita. So the Office for Tax Simplification, of course, issued its report into VAT simplification,
Yeah.
and there were a number of proposals or suggestions made in there about the VAT threshold. On the face of it, you'd have thought a high threshold was a simplification itself for small businesses, as
Yes,
you well
absolutely.
know, Sue. But clearly the Chancellor's now got the VAT threshold in his sights. I mean, it is the largest sort of threshold in the EU by quite some way. And beforehand, of course, there was a suggestion that he might look to reduce it substantially. So I think that would have been his car crash moment, I guess. So he backed off that. I can't imagine why he did that, but I suspect it was the thought of
I can imagine exactly why he didn't do that.
backlash from small businesses.
Well, yes, because there was rumour that it would go down to 20,000.
Yeah.
Which, I mean, what would that do to the businesses that were already above the 20,000? And the point that was made was a lot of these small businesses employ people, and if they couldn't continue with a lowering of the VAT threshold, so suddenly they had to increase their prices by 20%, it could put a lot of people out of work, and that was the pressure that was brought to bear.
I mean, I think that's entirely right, isn't it? So I think they're clearly also now concerned about the threshold and the way you move into it. I think seems to be the sort of focus of concern.
It is a cliff edge, and that's what the consultation's going to be about. The operation
and that's
of the
something that
threshold.
we have actually identified as a problem for a long time.
Yes,
Yeah.
yes.
I mean, some of the comments that were made in response to people who stopped trading to avoid going over the threshold, I think were a bit unfortunate. I mean, I don't see any problem with somebody stopping trading, going on holiday in August if they want to. I think it's only where people move into the black economy for, the extra few thousand, that's where clearly there's a problem. if it's stopping a business from growing, well, I'm not actually sure that a business that was growing and wanted to would necessarily stop trading to avoid registering for VAT, but they do need help when they first register.
Well, a friend of mine's a potter, and he's got a pottery shop, and people are prepared to pay X pounds for the mug, and they don't care whether that's got VAT in it or not. No. So if he goes over the threshold, it is a distinct hit on his profit, and so he doesn't. He stays within the threshold.
No, we lost our local coffee shop for exactly that reason.
Yeah,
they got to the VAT threshold with their turnover. And when they went over it and had to register for VAT, they couldn't put the prices of their cups of coffee up as a cost down the road that they're already in competition with. They don't have the same economies of scale that a larger business can benefit from. And unfortunately, it just wiped out their profits and they couldn't continue.
Well, both of you obviously spoke to the Chancellor and listened to you. And what he said was that he's going to freeze the level, so he hasn't put it up by RPI, which is what he has been doing.
So it's going to stay 85,000. It's going to stay at
85,000 for 2 years, and then there's going to be a consultation on the threshold. So I think, I'm afraid that the 85 is clearly under threat, but quite where it will go. But maybe we'll get some smoothing at some stage.
Yeah. And of course it will have an impact for making tax digital, because the starting point for VAT returns will be those with an income of 85,000. It's going to be fixed at that level. It would have been difficult to see if the level had continued to move, how they would make that the MTD start legislation align with a constantly moving threshold. So that is more simplification, but I can't help feeling that the whole thing is linked.
No, I agree.
If I might just comment, well, do you want to finish on VAT? Then I'll say a bit more about MTD.
Okay, well, look, there were a couple of other things, these online marketplaces. So HMRC got a bit of a pasting in the Public Accounts Committee and the Treasury Committee about effectively people on online platforms, Amazon obviously being a typical example, where effectively those people were not within the UK system, even though they were effectively businesses and presumably well over the threshold, and that the marketplace were turning a blind eye to it. And they were undercutting, obviously, other businesses.
Yes, they should be registering in the UK.
They should be registering, So, and also Amazon went up before the committees as well, and did talk about it. But clearly, I think they talked about 1.5 billion. So it's a big problem.
This is the tax loss.
Yes, So the Chancellor clearly needs to do something. So they now suggest, well, they're going to have provisions in the finance bill next week that effectively you're going to have joint and several liability. So the platform is going to be also responsible for effectively policing the VAT, really. So if the person selling it doesn't pay VAT, then Amazon is potentially going to be liable. And that will apply to both people who are in the UK already, and also if it's an overseas seller, where the platform knew or should have known that they would be potentially should be charging VAT. So it's going to put a lot more sort of emphasis on the seller, on the platform to actually do the due diligence in this, and it'd be interesting to see how the market shakes up, I think, on it. Really.
Well, yeah, I mean, there are suggestions that we may see other marketplaces setting up that perhaps are less scrupulous, because I feel that Amazon will play the game, and clearly they're in the sites.
Well, Amazon will play the game, or they will make sure the due diligence. I mean, coming up as well, of course, there's potentially split payments. So you're going to potentially split off the VAT when it goes to the platform, and the VAT will be treated separately. So there's a consultation coming out on that next week as well. And then also VAT numbers. So the platform is going to have to check, if you like, that the VAT number that's given to them is a valid one. So
this is one from the seller?
From the seller.
Who should have registered.
Yes,
They can't just pretend to register.
So they're going to need to give the Amazon for the VAT number, and they're going to need to check it, and they're going to need to display it on the website. If they don't do that, there's potentially going to be a penalty.
I mean, it's very interesting, because coming up for Christmas, one of my sons last year gave me a Christmas list that had a lot of obscure LPs on it. LPs, exactly, the actual records.
Now,
and of course I just Googled them because I couldn't get a lot of them on Amazon, and I ended up buying these things from all over the world. and at that moment in time, the pre-Christmas stress, I wasn't thinking to myself, I wonder if this business should have registered for VAT that I'm buying this record from. But clearly some of them are fairly big sellers, dotted around the world. And so, we all engage with this stuff without even realising.
Well, I think the whole sort of tax of digital is becoming a big issue, isn't it? I mean, we've seen this at the OECD. We've also got this measure that was announced in the budget of potentially having royalty payments in respect of sort of digital sales relating to UK, potentially also going to be subject to withholding tax. So I think this whole space of digital sales, we're going to see a lot of changes in the next few years. And of course, there's that tax corporation tax digital services as well.
I think we probably will need to come back to that in December. I think we're going to have Ian, who's our international tax manager at the Institute. He's going to come on to TAXtalk, and we'll unpick that one some more. Yeah.
I haven't quite got to it yet, I'm afraid.
Well, there's a lot there.
Oh, there is a lot there.
Just to pick up a couple of points, we mentioned MTD briefly in passing. I don't want to go through the new rules again because there was a free webinar that we held 2 weeks ago now that anyone can watch. It is available on the ICAEW.com website, and if you go to our MTD hub, you'll find a link to it from there. But what came up in the budget was some proposals for new rules for penalties. So the £100 self-assessment late filing penalty looks like it's going to be replaced. We're going to have a 12 months period, penalty-free period from when MTD comes in, but the £100 penalty will be then replaced by a points penalty. So points do not mean prizes anymore. Points will now lead to penalties. And
like driving license or driving.
Yeah, it will work a bit like a driving license. And each time you miss a deadline for filing your submission, whichever one that may be, you'll get a point.
Yeah.
And once you've got a certain number of points, obviously there'll be a fixed rate penalty applied. We'll have a different system for different taxes, and I expect we're going to go through consultation process, and it will then be doing some webinars on the detail of that.
Yeah.
But that's one for the future. Another big change that we really need to cover from the budget was the SDLT. Sue, you've been looking at that for us.
Yes, this was the closest it got to a white rabbit, wasn't it?
It was.
It had been trailed in the press that there would be a holiday for stamp duty land tax for first-time buyers, and his white rabbit was that he abolished it for first-time buyers for properties up to £300,000. So the maximum saving is £5,000. If the first time buyer's buying a property up to 500,000, then the first 300,000 will be exempt from SDLT. So yes, it could be a significant saving for some, but the further north you go, the less likely you are to be buying a property of 300,000.
Or indeed 500,000.
Oh yes.
If you go over 500 though, you don't
get anything at all. No,
right.
no. So the press is saying that it will force prices up.
Yeah.
I don't know. I mean, it isn't just first-time buyers going after these properties. It's second and third and subsequent buyers going after them as well.
And downsizers.
Yes, and so just because a small part of the market is going to benefit, is that going to push up the price? I think where there will be a difference is properties at about £500,000. I think properties that are just over £500,000, if it is a first-time buyer going for it, then they're going to want to negotiate the price down. But the seller will probably just say, well, I'll just wait for a second-time buyer.
Yeah.
But that's effective for, well, immediately. So it's for effective date, it says, which will generally be completion on or after the 22nd of November.
Right. There was another little gift for SDLT, wasn't
there?
Well,
it was just
very briefly.
The additional 3% SDLT when you've got a second property, and it's been hitting in certain family situations where there's a divorce or people are buying a bigger share of their own house, and they're getting hit by the extra 3% stamp duty land tax, and there's going to be relief for it. We don't know the precise details, but yes, yeah.
I was just just on devolved taxes and SDLT.
Yes,
I thought
yes.
it was quite interesting that we've got this exemption because, of course, Scotland and Wales have now set. Well, Wales is going to have its land transaction tax from April 2018, and they've just set their rates only last month. So I just think they'll be having their rug pulled from underneath their feet. Is
Yes.
probably
Yeah.
a good expression, but it just shows the difficulty with devolved taxes. I think when
Yes.
the UK government is sort of doing things unilaterally almost.
Yeah.
Don't know where that will go.
More complexity.
More complexity.
Frank, if we just stick with you for a moment. I mean, you were looking also at angel investors and patient capital, weren't you?
I was.
Do you
Now you're going to ask me about it, aren't you?
I am. Could you just sort of
Yes. Okay.
whet people's appetite? So what did the Chancellor offer us there?
Okay. So there was this patient capital review over the summer, which we.
Not for ill people.
Not well. I thought it was to NHS when I first heard it, but obviously I was put right on that. So we worked with our corporate finance faculty on a response, but clearly the government was looking to make it better targeted. I think the current system. So, I mean, so there's been a number of things that they've done. So the first thing is they are trying to retarget the EIS in particular towards high risk investments, because there's been a lot of concern that they're effectively capital preservation schemes, which, as we well know from even business expansion scheme days, has always been a problem. So there's going to be a refocusing of that towards grow and developing businesses with a significant risk of loss of capital. So that's going to be coming in. But the other thing, we've got a new acronym we need to get used to, which is Get Your Kicks. I kid you not, it's knowledge intensive companies. I think that's right. So where you've got knowledge intensive companies, I find it quite difficult to say.
Which is perhaps why they've shortened it to
Kicks,
because that's
yes.
much easier.
So where you got Kicks?
So currently the EIS limit is $1 million, but you're going to be able to put in $2 million investment if at least $1 million of that is into a kick. So you'll be allowed to put in $2 million and get your EIS reliefs on that. So that seems to be quite a major development.
Well, that's an interesting development, and perhaps one that we'll need to do some sort of webinar with.
With our corporate finance.
Yeah.
I'm still not quite sure what a kick, what the definition of that will be. We know what's knowledge intensive. So we're going to need to see that, I think.
Wait and see. Meanwhile, sorry, did you?
Oh, I was going to say there was also VCTs. They're looking to refocus those a bit, because I think again there's been concern
they might do away with them at one point.
Well, I think there's been this a move again to try and preserve your capital a bit rather than high risk. So they're again trying to, like the EIS, trying to focus it back towards the sort of high risk.
Right.
So they're going to, have some new rules about the investments and the periods that you're allowed to invest and how much you need to invest within a certain time. They're going to be publishing some detailed guidance on this. It's all going to be in the finance bill next week. From what I've read, I think the guidance will be coming out fairly shortly. And once they've done that, then you won't be able to then go for any assurance. They're going to stop the assurance, advance assurance.
Advance assurance. Oh,
so
right.
once that's out, it sounds
Whoa.
like that's going to be the end of being able to go and say, is this okay?
And we've actually just been sort of saying how well the advance assurance scheme has.
Well, obviously, if anything's going well, it's
it's got to go. It's got to go. Okay. Well, thank you for that on kicks.
Was that enough?
I think that's enough, because I know that Sue wants to kick her favourite subject at the moment, which is trusts. Sue, do you want to just give us a quick rundown? We've got to be quite short, so we're running out of time.
Yes, there's a consultation on trusts. It's not been published yet. We've had a couple of consultations over the past few years, one on simplification of the taxation of trusts, one on the fairness of taxation of trusts. Both of them proved to have more complex things in them than we'd already got, and both were just kicked into the long grass. But we're now going to have another one, so we'll wait and see what comes out of that. And Trust Registration Service, just to mention that there's been some new guidance. The guidance which we published on the 9th of October, which is provided by HMRC, they've now updated it.
It's on our website.
It's not, the 22nd of November update isn't on the website yet. That will go up either today or on Monday.
Is this draft guidance or?
Yes, the original wasn't draft, but the later one is draft. So presumably less sure now than they were before, which doesn't surprise me. It's got some clarification as to when you can just put it's a class of beneficiaries rather than giving the full names, addresses, national insurance numbers, inside leg measurements and so on.
So that's
benefit.
That sounds helpful.
It does. I've just got to get to grips with what the new definition is. I've been working on the budget, so
well, maybe when you've caught your breath and you've been able to look at the guidance and it's moved on from being draft, what we could do is either do another tax guide or another webinar.
Yes, it's. I mean, like with residence and domicile, it's a moving feast, and until it stops moving, tax guides can be more harmful than beneficial, can't they?
Yeah. Well, there've been some changes. We just quickly mentioned non-resident CGT.
Oh yes. Well, we've had non-resident CGT for residential property for, was it 2 years now? Just over 2 years. They're now going to include commercial property. It's going to be all immovable property, and that comes in. I've got some different years here, so it's that's from April 2019. Another change is companies, non-resident companies that own property. That rental income is currently liable to income tax. They did a consultation earlier this year as to whether it should be income tax or corporation tax. They've come down on the side of corporation tax, and that's from April 2020. Another thing on companies, just while we're saying companies, is getting rid of the indexation allowance on capital disposals.
It's frozen, isn't it?
It's going to be frozen, so no more indexation to be taken into account from January 2018. It's only bringing it into line with individuals because the corporation tax rate's gone down. It's 19%, it's going down to 17%. The argument is, why should they get indexation allowance when individuals don't? So.
Okay, well, thank you very much. I should mention, Sarah asked me to mention the IR35 consultation. Just briefly, there are proposals that we have kind of long suspected would happen, that the extension or the change in the rules to the public sector contracts would be extended to private sector contracts, and we're going to I think we're going to see a consultation on making that switch shortly. There are lots of problems that have been identified with public sector contracts, and we'd quite like to understand what makes those so insignificant that it's worked really, really well, and we can therefore make the switch across the board.
Tax is what it's.
Tax is what it's about. Okay, right. So we will have to wait and see, and I dare say there'll be a webinar to be had out of that too. Just a couple of things to point out to finish up with. Of course, you'll be getting your budget supplement very, very shortly now. We have a budget webinar this coming Monday, which is the 27th of November. Rebecca Bennyworth will be doing that. She'll be looking at budget topics plus a wrap-up of some of the Finance Acts changes that we've had during this year. You'll be able to see it live, or you can watch it again later in the week. That was tax faculty members only. We do also have a webinar on Friday the 1st of December when Sarah Ghaffari is going to be joined by Pete Miller, and they'll talk about taxation of reconstructions. And next Friday, 1st of December, is also an exciting day for all of us because we're expecting another finance bill.
Any guesses how long it will be?
We're expecting a really short one. Long, really, but I think that will make Frank smile. It's a short one. So thank you very much indeed for joining us for today's Tax Talk. The December Tax Talk will, as usual, it'll return to its normal time, which is the second Wednesday of the month, and they are all available to watch again later. Thank you for joining us.
Thank you.